Welcome back. Just a short time ago, King Charles delivered the throne speech in Parliament detailing the Liberal government's agenda. My next guest says the government will need to act and act quickly and smartly to put a floor under Canada's weakening economy. For more on her outlook on the economy, we're joined now by Beata Caranci, chief economist at TD Bank. Beata, what do you think the government's top priority should be now, right now, in terms of supporting the Canadian economy and supporting and transforming the Canadian economy?
Yeah, the transforming part is the key there, as opposed to supporting, because what we're really talking about is having to put in place really compelling arguments for why businesses should be increasing investment and why foreign companies should be looking at Canada for a place to invest. All jobs are tied back to a company, an employer. And so if you really want to support Canadian jobs, you really have to create this healthy business environment. And that has been lagging, not just lagging, but fairly absent over the last decade, because we've seen a deterioration in Canadian productivity and in the standard of living. And so we're really looking for factors that were mentioned in the speech of the throne, which was basically, the Liberals are looking to accelerate permitting processes, to speed up the timeline on approvals for projects in critical minerals and other resource projects, infrastructure. These are all great initiatives. They're early initiatives, meaning that it's the least you can do. It may not be a sufficient condition to bring in the investment, because we are talking about when you're doing a resource project in Canada, you're looking at an average time length of about 15 to 18 years. So taking a couple of years off of that isn't going to make a compelling case. So they're going to have to continue to press along these initiatives, but there's some low-hanging fruit they're going to tackle right off the get-go, and they got to get going on those as quickly as possible. And that did come through on the speech. For example, the notion that for provinces who want to coordinate with the federal level into doing like a one review process rather than having both jurisdictions oversee and review environmental standards and other factors, that would be a very simple measure at a low cost that can be done immediately, and they're aiming to get that done, I think they said, in the first 6 months.
On big projects and the projects that people tend to think about in this context are pipelines, particularly perhaps natural gas pipelines and additional liquefied natural gas facilities. How important is it to get the projects done in a reasonable time frame on budget? You've made some comments in the past about the risks to projects that are delayed, prevented, or run way over budget.
Yeah, that is a bit of a trademark, right? It's very rare that you have something come in under time and under budget in Canada, especially when they're of this complexity and scale, pipelines and crossing various jurisdictions. So it's not just pipelines. I would put the emphasis actually on broader resource development. I think one of Canada's true advantages is what's underneath our ground that hasn't been extracted, which is critical minerals. We do have the technology to do this in the least amount of footprint as possible relative to other countries. We're very mindful of this. And I think that I think Canada defaults to pipelines and oil and natural gas. It's obviously a strength and we need to leverage it. But this is what I mean, it's a transformation that we have to go much bigger in scale and looking at the extraction of critical minerals, which right now the world has a tremendous dependence on China, which controls the majority of these critical minerals, both in extraction and in processing and refinement. So Canada can put itself in a tremendous competitive advantage, but we just can't seem to get the ball rolling there. So to me, the area of new growth, new development, which would have the highest impact in Canada's reputation and attracting investment and show that we really are being transformative in improving processes, would be in the areas of minerals for Canada.
One thing we did not hear, and I don't think we've heard it from Mark Carney during the period from when he was running to be Liberal leader to the period after, is a corporate tax cut. Is that a tool that Ottawa should be looking at to make the country more attractive to investors?
Yeah, so what they have talked about is doing a review of the corporate income tax structure. Unfortunately, reviews are not commitments and they can take a long period of time. So it would be great if we can get an ETA, like specific hard timelines on the delivery of that review. There's a few areas that they can certainly tackle. The U.S. effective tax rate continues to fall, and Canada's has not kept up. We are seeing initiatives at the provincial level. So, for example, Ontario's budget announced an Ontario-made manufacturing and investment credit, which was up to $3 million, which is a rise from $2 million. And so that is in part lowering your effective tax rate if you can get the investment credit as a partial offset. The U.S. is using a different tactic. They're doing 100% deductibility, a bonus depreciation on new investment. And it's not specific just to manufacturing. For them, it's all businesses. And I think this is where Canada needs to get its mind instead of cherry picking industries, making sure benefits go across industries in services and goods. And that medium and large size firms aren't penalized at higher tax rates relative to smaller firms. That prevents the growth and the development. So a bigger, bolder move, I think, is needed in Canada. We are seeing, like I said, these smaller initiatives out of the provinces, but this is where the federal government can come with an overarching plan to be a bit bolder.
Beata, thank you so much. As always, Beata Caranci is chief economist at Toronto Dominion Bank. Well, as the trade war weighs